Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
We are going to do the history of Oracle today in 10 minutes. So I'll try to get through Exhibit A, B, and C in an efficient way. Nothing new on Exhibit C, except to note that peace in Gaza is good for the world. It isn't necessarily good for oil supply or the difference between oil supply and oil demand. And Iran, in this chart, is actually going to produce somewhat less oil this year, but more oil next year. And sanctions on Iran just really aren't happening. 17 Arab countries, Muslim countries, signed on to the peace accord. It certainly had an influence on Hamas, especially when Turkey signed and Indonesia signed and people like that. Iran, in effect, wasn't a signature, but did put out a release saying they approved of the 20-point plan. You know, oil supply, I think the way to look at this is Saudi Arabia, which has in the past done this. You see, Saudi Arabia was 10.6 million barrels in 22, 9.6 in 23, 9 million in 24. They get to a certain point and they decide they've done enough curtailing that generally they're complaining about cheating by other OPEC or OPEC plus members. And they start to do what people in the oil business call market share. And I think the combination of things looking better in the Middle East from a macro point of view and Saudi doing market share is going to keep oil subdued. We turn to Exhibit B, the bottom Exhibit B. Last Thursday, the near month was $62. The 26 strip was $61. That's down, a full $10 from 24. I think it's going to stay there and possibly go down a little more. That as an oil investor in oil and gas producers, I definitely wouldn't come out of a position. I'd stick with it. I don't believe the world can live on $60 oil. I think supply will eventually be curtailed enough. So supply and demand will come back into balance, but might take 12 or 18 months. But so if you wanted to add to a position or establish a new position, I'd definitely wait, see how oil starts to, see if it trades into the 50s. But otherwise, I think you just sit still. Gas is definitely an oversupply I guess the summer wasn't warm enough. Interesting, there's all this talk about AI data centers needing more power. Actually, the amount of power, and that gas is the answer. The amount of power made with gas is pretty flat, 25 versus 24. While LNG has been very good, that has definitely meant that demand for gas is less than it otherwise would be, and supply was flat 24 versus 23 because the price of gas averaged $2.40. I think the price of gas is going to wind up in 25, averaging $3.60, and oil and gas production's rebounded to 106. 26 was pretty firmly established in the fours, and now it's lower. I don't know that gas is going to do too much better than the 350 range when we finally get through all the months in 26 and start looking at 27. The big increase here, of course, is the Permian, and that's associated gas. I think the Permian, which is our best oil production area, will have flat oil. I think the U.S. production will actually be down from 13.2 down to 12.5 or something average next year. But because the Permian, the gas-oil ratio keeps going up, I think gas in the Permian will be flat. So I think that prediction of 108 for 26 is pretty good. And when you run all the demand numbers through, you still have a surplus of a billion, 100 million a day, and you have absolutely full storage starting the winter. So gas may be a little on the weak side. Exhibit A, it's too early to actually come up with the 25 numbers, but the Congressional Budget Office came up with some estimates. They pretty much line up with 25 here on Exhibit A. The 26 forecast, I think, is pretty well thought out. The Congressional Budget Office had the deficit at 1.8 trillion for 25, now 1.9. I looked at the numbers carefully. I decided until we get more definitive numbers to stick with the 1.9. I don't think there's any question, but 26 will be less. Whether it's 400 billion less, which would be good, we'll see. But I think it'll be less, which will be news, this time next year or starting in the summer. For the moment, of course, both sides are completely at odds on the continuing resolution. And I don't know, from this morning's news or yesterday's news, they look more dug in than they were when the Democrats decided not to sign the clean continuing resolution. So I'm not quite sure how that comes out, but so far it hasn't seemed to impact the capital markets. Anything else, Mike or Jason?
I guess the trade war with China kind of brings a whole bunch of recent memory right back to us. This time, investors are sort of trading through it. It didn't spark quite the sell-off, or at least it wasn't as prolonged as it was last time around. But best we can tell, we got another couple weeks until something gets done between the U.S. and China. The question is does China have their stuff together in a way that they can exert more pressure on us? And it's hard to say. So we'll see how it goes.
Yeah, let's just review what happened there. Last Friday, the Commerce Ministry in China, which supervises exports, put in a provision where any export from China that was more than 0.1%, rare earths, critical minerals, had to get an export license. Our president went completely berserk. I think he must have been warned that this might happen, because Bessett has subsequently, in an interview, said that when they get together with the Chinese negotiators, there's someone from the Commerce Ministry and someone from the Finance Ministry, and the Finance Ministry person is more cooperative. The Commerce Ministry person is absolutely tough on trade. And it's conceivable that the leadership of the Chinese Communist Party and the President Xi are going to side with the commerce person. So I think Trump's going ballistic and saying maybe he didn't even want to meet with Xi in South Korea. Maybe there ought to be 100% tariff on everything coming from China, on top of the 30% that they already have imposed. I think that was probably all for effect to try to shake up the Chinese. I'm not sure. As Mike says, and I think Jason agrees, the capital markets are moving through this. I'm not sure that this isn't a lot more serious, and that in effect, what the CCP would be doing is saying we're better off in the long term not using Nvidia chips. We're better off having Broadway make the chips. We're better off not using Boeing airplanes. We can order up the same kind of planes from Airbus. We already are buying all our soybeans in Brazil or someplace. We want to be independent of the U.S. That will make China stronger. I don't know how the U.S. capital markets react if the two largest economies are not going to have any commerce, nothing moving from the U.S. to China or vice versa. That would be kind of a extraordinary outcome, but it could be that it won't be disaster for the capital markets, but certainly something we want to watch. With that, we didn't get through A, B, and C too quickly. Why do we swing into Oracle? That Oracle is on page 2 of the 20-page memo. It has been a successful company. They've booked themselves to OpenAI, which Mike and Jason covered last week. with that, Jason, Mike and I have been doing all the talking. Why don't you introduce the history of Oracle?
I'll start with prior to the founding of the company, Larry Ellison, Bob Miner, and Ed Oates, the trio was working together at a company called Ampex on data systems for the government. Specifically, they had a contract with the CIA. And during that time, this is another analogy to OpenAI, is during that time, IBM had a research project that they called System R, ran by a guy named Edgar Cod. And it was the first ideations of a relational database. And Edgar published some papers on the topic and eventually built a prototype. And you can kind of see a parallel between how Google invented the transformer models that are now underpinning all the language models. But that was ultimately picked up by OpenAI and became ChatGPT, which is the leader in that market. So the same thing kind of happened in Oracle's story, where they picked up this paper written by IBM, big company, decided not to pursue it, and Larry Ellison really ran with it.
So, Jason, why was this paper so influential? Why did this make the light bulb go off for Larry Ellison?
Prior to relational databases, data was stored in a linked list kind of structure. And what that means is it's more like a tree. So a good analogy for most people is the directory, the file structure on your computer. So if you're searching for a file, you go into the directory, look for the file there. If it's not there, you go back up, you go down another path, down the tree into another folder and look for your file there. A relational database is more like using some of the newer search features built into Windows and Macs, where you can type the title of the file you're looking for, and it looks across all the folders and brings you back the information it thinks you're looking for.
Yeah. So essentially everything was sort of siloed within the database, and relational databases made it easy to pull stuff out. So like the stuff that IBM made was really useful, but a business leader couldn't go to his team and say, hey, tell me like what percentage of our customers are male or female. Like it would have been very difficult for them to pull that information out. So the use case was like very much a business logic expectations. And really that paper was about the first instantiation of SQL.
Right.
So the way that we query databases. And now that's kind of just the standard of what everything is. But yeah, so the other thing that I found really interesting is when he was at Ampex and the rest of his co-founders, they were actually already working for the CIA or working on a project for the CIA. So when Larry kind of stumbled on this, his first customer was the CIA for this project. So they funded the company with $2,000. They didn't call it Oracle back then. Actually, the project they were working on before they started the company, the code name of it was Oracle. And later they renamed what they called SDL, Software Development Laboratories, was their company. They renamed it Oracle later. Actually, they had a third name in there in between.
Relational systems.
Yeah. So, but anyways, what's really interesting is that he was able to one, he recognized that this was sort of a big deal. Two, he recognized that IBM wasn't going to act on it. Three, he realized he had on his team or within his circle of friends the talent that one would need to stand this up. And most importantly, probably, he had at least the ability to pitch for a customer early on that would fund the development of it. So this company was started with $2,000, most of which came from Larry, and then this government contract for $50,000. So, and if you look at the history of Oracle, they would go on to, they wouldn't bring much more equity capital in. They primarily financed the company with debt. It's something that we've been talking about on this podcast, that even today, Oracle is probably the most debt-laden big tech company that there is. And that's been the way Larry Ellison got himself to the number one richest person in the world earlier this year, resurpassed by Elon Musk recently, but really quite impressive. So who is Larry Ellison? I'll take a little step back here. The stories about him as a young person are sort of like a thrill seeker, adventurous guy that didn't really want to work very much. He didn't seem like the prototype of like a founder that was really driven to do something and change the world. He was more driven through adventure. He describes himself as like a sprinter and not a marathon runner type of a person. Like he wanted to work really hard on something and then go do something else. The stories of his ex-wives, which he has quite a few, all sort of reiterate that. And his first wife left him because she didn't feel like he was going to make anything of himself. So just kind of wild character. But you see where he stumbles on this thing and the light bulb goes off and he decides to build this company. And he then structures the company very much for himself. And he tried to keep it under 50 people for a long time with an idea that like if I kept it manageable, I wouldn't have to do all the things I didn't want to do. Later, of course, they got quite a bit bigger and he kind of pardoned off his responsibilities so that he wouldn't have to deal with the administrative stuff, the finance, the accounting, and all that sort of stuff. So by the 90s, they're public. I think they raised like $30 million when they go public in 1986. And then in the 90s, they had this huge accounting scandal. And the long and the short of it was the sales team must have had a lot of influence on the way they designed their compensation contracts because they could sign a customer for a deal and then have like 360-day terms, but get paid. The salesperson would get paid commission up front. And that led to a lot of salespeople pushing the envelope as to what a real deal really was. And actually during this time, there's a story about how a salesperson proposed a deal that apparently got rejected with an Israeli military contractor that built jets, where they would exchange a couple jets for Oracle software. The story goes that Ellison rejected that deal, but they were doing stuff like that, as I kind of tell you. So that actually almost brought the company to its knees. They almost entered bankruptcy. They were able to work their way out of it, and Oracle became a stronger company as a result. Going from the 90s into the 2000s, everybody was building on Oracle databases. I mean, you and I, when we were kind of coming up in technology, everything was Oracle.
Yeah, when cloud computing took off, they had a little bit of a stumble. Mm-hmm. They were the dominant player until that point, and then they didn't adapt their pricing model to a cloud database environment as quickly as others did. So they were used to charging per core in a computer, and at that time, you would buy a couple cores and a really powerful machine. Cloud computing kind of changed that paradigm where you started buying less powerful but more plentiful CPUs, and their pricing model just didn't match with that new philosophy. So a lot of people shifted over to other options in databases at that time. I don't think the business did poorly, through that. They just probably didn't grab as much of the market as they could have.
Now, bringing it to today, Oracle has been able to bring their database system to the cloud, and it's actually part of the reason why some people for training in particular really like the Oracle database as part of the solution. Today, Oracle finds itself once again at a major inflection point in technology, and artificial intelligence being that major inflection point. Just last week, Oracle announced the deal with OpenAI to host a bunch of its infrastructure in Oracle Cloud. They went from $80 billion in backlog to 400 and somethings, right? So you're talking about a pretty major contract with a company that has some similarities back to, like Jason said at the beginning of this, back to the way that Oracle was founded. So, you think about Ellison as an eternal optimist and being fairly good at recognizing the major technological shifts over time. Him being really a luminary of Silicon Valley. I mean, he was best friends with Steve Jobs, next door neighbors. There's really, he's remained very relevant for a very long period of time. Now, the difference today, you have OpenAI and Google. Google is not going to repeat the same mistakes that IBM made. While they were slow to get a product to market, they're not ignoring it altogether. But it is interesting how history in this case may not repeat itself exactly, but it definitely seems to rhyme.
Yeah, I think one thing you could think about, and I don't hear a lot of people talk about it, is these AI algorithms, the language models, are really a compression algorithm for all the data on the internet. And if you apply it to your company's data set, it's a compression algorithm for all the data that your company has generated. And all of that data in the past has gone into an Oracle database. Now, we're kind of doing both in parallel today because these language models still have some percentage of hallucination. But in the future, it could be the case where you're only going to query your data through a language model or some other AI algorithm, and you won't need SQL through a database. So potentially they're looking at this as, databases might not have a future, and they have to make a big, bold change.
No, that's great. Mike and I picked Broadcom to do a history of next week. After Broadcom, we'll figure out another one. I think this doing history of a company each week is something we'll be doing for quite a few more weeks. Jason, what about healthcare news this week before we get into page one, the early part of the 20-page memo?
I'll keep with my normal theme. California has become the latest state to enact some laws limiting PBMs' power at the state level. So Newsom signed a law earlier this week that does a couple of things. It limits a PBM's ability to force you as a patient to go to their affiliated pharmacy. So CVS is the prime example there. They own the pharmacy and the PBM and the insurer. It mandates that all rebates that a PBM negotiates have to be passed through to the customer rather than, kind of the right hand paying the left hand at that company. And additionally, it prohibits PBMs from making exclusivity deals with drug makers. Then TrumpRx signed its second big pharma. AstraZeneca's agreed that they'll join the platform there as well. And I saw a survey that one of the healthcare publications put out to a lot of executives at pharma companies, and it was something like 90% of them are considering direct to consumer filling of prescriptions, and they really think that's the future of how the market goes. So kind of eliminating the middlemen there.
Which Jason would say is long overdue.
Correct.
Page one, news on Apple, Amazon, Alphabet, Microsoft for Tesla. It's been actually kind of a quiet week, but over to the two of you.
On Apple, there's been some kind of shakeup in leadership. Jeff Williams resigned. That was announced a while ago, but everybody's guessing as to who could be the next CEO to follow Tim Cook. That's probably 5-year-ish time horizon, maybe less. And the senior vice president of hardware, whose name escapes me at the moment, is currently the leading candidate, but all this could very much change. On Amazon, they released an agent builder product for AWS Cloud called Agent Core. We think this is just kind of the natural evolution as to how companies are going to build software. One of the things we've been working on internally at Topmark is looking at the way that each of these software companies is approaching artificial intelligence. And this approach for Amazon makes a lot of sense. They want to get everybody ideally building on top of their services. Those services they can then design to run on their hardware, and they can own the full stack and delivery mechanism. Fits very well with Amazon's approach to doing business. Let's see, Hunt and I talked this morning about Microsoft doing a pretty large, couple 100,000 GPU deal with a neocloud in Europe. We know that Microsoft pumped the brakes on data center build out, or at least recognized that they weren't going to be able to do it as fast as other people would. So doing these deals often involves making guarantees to some of these companies so that they can get the financing to build out those data centers. So Microsoft is, in a way, still spending the CapEx, or not having to spend the CapEx, but having to guarantee some of this stuff. And it's a different financing approach. And it doesn't mean they're not spending a lot of money on CapEx, they are, but the capacity build out that they're acquiring is still quite large and certainly supplemented by third parties.
Yeah, we think that the CapEx, if you cite across page one, Apple's notably low on CapEx, but Amazon at 90, Alphabet at 65, Microsoft at 65. Those CapEx amounts were probably larger if you included the the situations like Microsoft where they, in effect, sign a contract to commit to use GPUs, and cloud goes out and finances against that contract. So the real CapEx here is probably quite a lot more than appears on the balance sheet. Page 2, Oracle. Mike and Jason made the point that Oracle's always had debt. Now, of course, they're going to have a lot more debt as they build out their data centers to service OpenAI. Broadcom, our subject for 10 minutes of history next week, also has used debt. So you compare that to Salesforce, ServiceNow, and Snowflake, which basically are all software companies with no debt. So there is kind of a different philosophy here. Those companies. You get the Nvidia page, which is the third page. It's quite remarkable. China trying to restrict chip equipment and anything else, software, whatnot, from the U.S. And it wouldn't necessarily be good for Nvidia, but they're still sitting there in a equity market value of $4.5 trillion. And just to look at page 1, the equity values, I mean, they're well ahead of everyone. I mean, the next highest is Microsoft at 3.8 and Apple at 3.7. But I mean, the equity valuation of Nvidia is quite a remarkable situation to be at $4.5 trillion. Everything else on the page looks relatively small by comparison, other than Taiwan Semiconductor. And of course, we can talk about Nvidia, or we can talk about, the companies on the first page, but none of this would work without Taiwan Semiconductor. They are trading for about $1.5 trillion, and they are pretty heavy capital spenders. If you see their $30 billion of CapEx, fairly significant. And I think probably after we do Broadcom, maybe the next one we tackle, because it's so topical, would be Taiwan Semiconductor.
I do have a little bit of news on Taiwan Semiconductor. Pricing for the 2-nanometer wafers has been released, and some people were expecting a 50% increase in pricing, and the real increase, the actual, has been somewhere between 10 and 20%. So it's not to say that they couldn't have priced it 50% higher. As Jason talked about, I believe last week, they're very careful about raising prices too quickly in order to retain the loyalty of their customers.
That said, they're a $1.5 trillion company, and they're still growing. They release their revenue every month, and as of September, they're growing at an annual rate of 35%. Mm-hmm. So,
really remarkable. The page I updated last weekend is the Mastercard Visa page. These companies keep turning out more cash flow every year. I mean, look at these numbers. Visa has $38 billion of revenue, $21 billion of free cash flow. Mastercard has $30 billion of revenue, $15 billion of free cash flow. The only one who comes close to doing that is Nvidia, which has the incredible margins. I mean, Nvidia, with something under $200 billion of revenues, does $80 or $90 billion of free cash flow. But these companies also, if you look down, sales growth, I mean, they do seem to be able to compound their revenue and free cash flow growth in double digits. So pretty remarkable businesses. Just in closing, Jason, I know you're interested in kind of an adherent of blockchains. Do you think blockchains, as they exist now, stable coins, or adopted by large financial institutions like JP Morgan, do you think it is any threat to Mastercard and Visa, or how does that look to you?
We haven't talked about blockchain in quite a while, 2 years maybe. It's been a while. I don't know if either of you can tell me a use case where it's being adopted in those 2 years since then. Right. I don't know of any. I don't. Everyone said that it has all these great uses. I have yet to see a single one of those. In fact, I think it was Coinbase announced that they're releasing a new feature where they're able to roll back a transaction, which is fundamentally what the blockchain was trying to prevent. Yet they see the need for it, as the modern banking system does, is if there's a fraudulent transaction, you have to back it out. So the answer is no.
Very succinct answer. with that, I think since we have definitely at least as far as Mike and Jason and I Mike's no fan of blockchains, and I'm not either, but at least we have Jason. I think when we finish Broadcom, maybe then we'll do a history of blockchains before we do Taiwan semiconductors. So we'll have a chance for Jason to express himself on the blockchain. With that, we're over. We're 5 minutes over. So everyone have a good week. We'll be here exactly 7 days from now, and everyone be well and stay healthy. Thanks very much for listening. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed.